So investors would be glad to get this out of the way given how long awaited this fine is. Does this mean that Didi can get back to business, and does it lift the broader sector?
I mean, the initial reaction from investors were pretty positive. You know, we saw that big jump of Didi shares in the U.S. OTC market. And I mean, investors are all, seeing this as a removal of a major overhang for the company. And this is also consistent with what we've seen with, other tech giants such as Tencent, Alibaba, Meituan, etc. But from a share price perspective, investors are saying this relief rally might be rather short-lived because the overhang surrounding Chinese tech companies, the regulatory tightening has not completely been removed, and for Alibaba, Tencent, etc., the share price has resumed dropping after they were fined by the Chinese regulators. So I think it's safe to say that Didi is not completely out of the woods yet.
Were markets a little bit ahead of themselves last month when there was a lot of optimism that doesn't seem to be holding up now?
Yes, we've seen a very strong rebound from mid-March up until last month. But as we enter into July, there actually has been some kind of pullback for Chinese markets. I think a lot of long-only investors, they have indeed been adding their positions in Chinese market, but other investors such as hedge funds, etc., they are still very cautious on China, not just on the regulatory front, but also they're very closely monitoring the COVID situation in China. And, we see, sporadic outbreaks, and also, the risk of going back into a very stringent lockdown in China. And that's all adding to the risk of investing in China right now. And, with also the mortgage boycott crisis outbreaking in China, investors will be closely monitoring the impacts on financials and the property sectors, which are two important pillars of the Chinese economy.
We'll have to leave it there.